All right. Good morning, Trade Pros. Hope you guys are having a great day today. Hello, Dan Trader. Good morning. The YouTube community as well. Good morning, Trade Pros in the room. We got a great day ahead of us. There's a lot of volatility this morning, primarily in oil. And so even equities traders need to pay attention as very important things are happening. So let's talk about it. That's kind of what I had planned for today's morning market update. Explain to you what's going on here in oil because a lot of people are confused. A lot of friends messaging me out of the blue asking what the heck is going on. All right, and let's talk about it. Okay, first and foremost, yesterday something very historic happened. All right, futures traded on the CME for the WTI, the oil contract, down to negative $40 a barrel. All right, it settled at minus 37. So here's what you got to understand. All right, why did this happen? Well, first of all, it's historic. It's never happened before. I looked at it and somebody asked in the room, can crude oil go to negative? And, theoretically, yes, but the answer was no, not really. Somebody would pick up the enough demand for it, but that wasn't the case yesterday. Yesterday, CME announced that crude oil futures can go negative if that's where supply and demand and the market pressure took it. So here's what you got to understand. When you trade products like crude oil, all right, anything that's a commodity on the futures exchanges, by the way, the smoke that you see here is a vaporizer, so you don't have to, it's not a vaporizer. It's essential oil. It is a vaporizer, actually. So don't call 911. I'm in no danger. So here's the thing that you got to understand. When you buy crude oil, right, there's a symbol. And with that symbol, there's a month code. And these little pads that we have at Trade Pro Academy, all right, you can see at the bottom is where those codes are for the month. So every respective month has a symbol, a code associated with it. That's the month that you're trading. And with futures on commodities, they are settled physically, meaning that at the end of it on expiry, you're going to have to take delivery of barrels of oil if you hold the contract into the expiry date. All right. The other thing you have to understand is as futures traders, that's why we roll forward the week before expiry. Crude oil contracts expire 10 days before the end of the month. So the May contract expired in April. The June's going to expire 10 days before May ends. And the understanding here is that you're holding a contract that has a shelf life. So if you want to speculate in the long-term value of crude oil, the futures place isn't the place to do it because it's got a shelf life. All right. And you got to also understand crude oil is a supply and demand driven market. And while futures allow you to speculate, you have to understand what you're going up against. So if you're holding a contract, if you're long one S&P contract, okay, you're taking 1,000 barrels delivery on the day that it expires, which is today. Okay, the crude May contract expires at 5 p.m. today on the close of trade. Okay, so here's the deal: if you own a barrel if you own one contract, you got to take 1,000 barrels of delivery. And what that means is they're usually in Cushing, Oklahoma. That's where WTI contracts are settled. And so if you don't have a storage facility to collect it from there, you're liable for 1,000 barrels of oil. And they don't just deliver it to your door, right? You got to have a facility that's approved that can handle the crude. So what happened here is this is a speculator-driven move lower. This wasn't professional traders. Professional traders are already onto the Junes, and now they're even stretching the curve. So we could really make this a whole hour-long webinar if we had to. But if you need a storage facility, okay, and you're long a futures contract, retail bought the May contract, which is expiring soon, not realizing, and they probably bought it because that's cheaper, not realizing that contract's going to come due. And if you want to get rid of your futures position, you got to sell it to somebody. Okay. What if nobody wants it? Well, then you keep selling it lower. Nobody wants it. There's no demand for that contract. Keep selling it lower. You hit zero. All right. And what they're saying is there's so much crude oil available. There's so much crude oil in storage facilities. They're pretty much full. Nobody wants to take crude oil delivery. All right. Everyone's trying to sell their crude oil. Facilities are full. Therefore, you're going to have to pay somebody to get your contract off your hands. All right. And so when it flipped negative, I can imagine some retail traders saying, wow, I could buy this thing and get paid. Yeah, you can buy this thing and get paid, but you're getting paid for the fact you're going to have to take 1,000 barrels of oil in just a day's time. And that collapsed the curve. I can't help but wonder who came in to rescue the market yesterday. All right. Somebody had to step in to absorb all that crude. And, it's going to come to light in probably days, weeks, times. But here's the thing about crude, though, is that, you're wondering, what can I do with the oil? Can't they just turn it off if there's so much supply? Once you tap a well, it flows. That's the problem. You can't just shut in a well. It's very difficult. So it just continues to flow. So when it flows and nobody demands it because everyone's locked down for COVID, they're not driving and going to work, what ends up happening? There's no demand. So it keeps flowing out of the ground. It keeps going to storage facility. And when the storage facility gets full, that's it. Nobody wants crude anymore. And that's what happened. People getting long a contract. We didn't really understand it, aren't as educated on this topic, because when you hear something, down 30%, the person every day that you ride the transit with to work is also talking about it, and that becomes a problem. So now we're switching over to the June contract that's trading. All right, June never went into negative territory. If you imagine futures, there's a curve of expiries, and that's called the curve. All right, so it's not one contract that dictates the price, it's the curve. As the prices go up, it's called a contango. And so what you have to understand is what happened yesterday was absolutely historic. There were 100,000 contracts that were looking for an exit and they had nowhere to go. Nobody wanted to buy their crude oil. And no professional traders are looking to buy it. All right. Professional traders already moved on. They've rolled over to June, which is currently was above $20 yesterday. Today, traded as low as right now, 14.15. So that contract is down huge as well. Okay, it hit limit down at what was the price that it limited down for 2 minutes? You get a halt if there's a 15% variation in crude oil, and that halt price was $11.79 a barrel. So now there's that same problem in June. Everyone's trying to get rid of crude. Part of today's sell-off is the fear of what happened in the May contract. Right? Everyone's saying, "Holy crap! If expiry comes up and I can't get out, that's a problem. Let me get out now." So you're seeing downside pressure more on this historic run in the May contract than this is devaluing the price of oil. All right. So if you look at July, which is the N contract, you look at August, which is the Q, if you look at September, which is the U, you could pull prices of these contracts right now and you'll see the curve. All right. And I'll show the team in the room the curve afterwards, how it looks, what it means. Okay. But that's what happened yesterday. All right. A whole bunch of retail traders got stuck along a contract they probably didn't understand. And I just wonder who came in to the rescue. And there's rumors out there that the United States filled out their SPR, which is where they store oil. And this was a great chance to do it, all right, near the zero level. And, it's interesting stuff. It's historic. It's a lot of volatility around the crude oil complex. There's a lot of questions now about the USO ETF. There were concerns if USO was one of those, the ETF that holds the physical, was one of those avenues that got caught long. I'm sure they did for a piece of it. But USO money managers are smart enough to roll forward. So if they did get caught, it wasn't fully with their pants down. It was a fraction of the volume that they didn't get a chance to roll the week prior. So on futures, you're always rolling forward before the end date. You don't want to hold it to expiry. It's not like an option where if you hold it till expiry, nothing happens. You don't have the option to be exercised. You have the right, right? You will be exercised if you hold this contract. You will have to buy crude oil, 1,000 barrels. Okay. So now you guys know that there are different expiries. If you're new to crude oil trading, this is an eye opener for you. Be very careful out there buying something just because it's cheap, because now you might have to pay somebody to take it off your hands. What's worse than losing your entire value of the investment? Having to pay somebody to get it off your book. All right, I imagine triggered a lot of margin calls, big losses around the curve, and this morning some traders are licking their wounds. I guarantee it. All right. So be careful out there. You always have to be smart. You got to always trade the contract that makes sense, not the one that you're greedy about. I'm sure some people said, I'm going to buy the May at like $4 a contract. And then look, June's trading at 20, guaranteed profit, right? Wrong. All right. Key earnings on yesterday's session. Equifax came out 7.5% higher. All right. Halliburton's up 0.6%, and IBM is down 3.1%. This morning we had Coca-Cola earnings. They came out a revenue of 8.6 versus 8.29 billion. So Q1 didn't have an impact from COVID on Coca-Cola drinkers, but Coca-Cola did say COVID-19 will impact Q2 materially. The company withdrew its guidance for the second quarter. You withdraw your guidance when you don't really know how bad it's going to be and you don't want to even make a statement about it. All right, after the bell, we have some more earnings today that are very key for the NASDAQ. We have Netflix at 4 p.m. Eastern. That's going to be a very important company. Be careful around that time period and holding positions overnight. Okay, Chipotle, Texas Instruments, and Snapchat are all due at the end of the session at the closing bell today. All right, in the crude oil complex, it's down 42% on the June contract. Like we mentioned, circuit breakers were triggered, and this is pulling the entire risk complex lower. Crude oil is a very important asset to the economy. We pretty much are powered by crude oil. So this contract becomes of utmost importance. Our oil trading group, this morning, the light is on you guys, because this is going to be super key. And be careful. You gotta trade with an educated group of traders. And I invite you guys to come by and check out TradePro Academy. This is proof that the world needs this information, because I'm long crude oil, and yes, I'm taking a loss on it, but I didn't buy the futures. I bought the USO call options, and they're dated for October. And so the maximum I could lose is $1,500 on that position. Start small, and as it goes up, you scale into it. And I have time. All right. You always want to give yourself options and scenarios that you could play out. You never want to get yourself stuck long a contract that expires in days. It's the absolute worst thing you can do with futures trading. That's why we roll, all right, a week and a half prior. And I'm sure a lot of the traders in the room and on YouTube wonder why we roll so early. That's why. All right. That's why most professionals roll. They want to give themselves enough time so they don't have to get caught with a contract they don't want. Okay. In Asia, Japan's down 2%, Hong Kong's down 2.2%, China down 9/10%, almost 1%. India down 3.2%, Europe at midday, London's down 2%, Paris down 2.5%, Frankfurt down 2.7%. All right. And in the US, Dow, S&P down almost 2%, NASDAQ down 1%, a little bit stronger than other markets, but it too is dropping. All right. Gold prices down 1.6%, Bitcoin down 3.7%. Everything's selling off. And, I think just people realize that, hey, if crude oil is having these problems, are we past the thick of things? And if you look at the market, it's rebounded 20% off the lows. And we didn't expect it to get new all-time highs. So I think the sell pressure's here. It's time to see how the sell side holds out. Be very careful. Today I'm going to be selling rallies on the S&P. Just got to pick good levels. And then when those levels don't work, then you could flip bias. The morning, careful with the idea that you should be long just because it's cheap. All right. You understood the cost of cheap. This isn't Christmas shopping where you could buy something and then you could try to haggle the people to as cheap as possible. Things can go negative, and that crude oil is prime example. Very careful out there. I don't want to hear any negative stories, any blowouts. Thankfully, we haven't had one, and I'm blessed to our community for that. All right, 10 a.m. existing home sales come out. That's all I got for you guys. I love you all. Let me just see the comment section very quickly. No, no, Dimitri, I wouldn't touch the May contract. So here's the thing. If you would have shorted the May contract, all right, yesterday, and then bought it back at the low in the negative territory, you would have made $50,000 for every $1,000 of margin you had. That's all it took. You would have 50x your money. However, here's the danger in that, right? Short or long, you're building a pattern where you are trading crude before expiry. And the danger with that is that one of these days you're going to get caught on the wrong side. It doesn't happen often, but when it does, taking a risk, you can get away with it a few times, but the outcome's dire. All right. I would never trade the May contract. Wouldn't have traded it since last week on Tuesday when we started rolling. That's off the book. Now we're looking at June. Can June go to zero negative? Sure, it can. Not right now, but the closer we get to expiry, with this oil pressure, oversupplied, underdemanded commodity, you certainly could do that. All right. So be careful. Be careful. Be careful. Love you guys. Have a great rest of your day. I'm going to open up to Steven to talk about the oil levels, and I'm sure he's going to have some insight too. That's just my piece. Love you guys. Be safe out there. I'm happy I could demystify this for you. All right. And a lot of what's happening has to do with storage and the two factors of oversupply and under demand. And once you understand that, everything else makes sense. You guys take care. Have a great day. Be safe. Manage your risk. Trade Pro. Goodbye. We'll see you tomorrow. Ciao. Mr. Box, over to you, sir. I stole your